All right, welcome back. You're watching The Money Show, and we are giving you answers on your portfolio queries. And with me, I have is Pankaj Mathpal, who's answering your queries live. Let's take Avik Sain's question. And all right, so he's been investing now. He's 39 years old, and he's investing in stock market. He's got PF, NPS, property, sovereign gold bond, LIC plans, term insurance, health insurance. He wants to invest lump sum 5 lakh rupees as an emergency fund for 5 to 7 years, and he'll be continuing this investment for further 8 to 10 years as well. But then he's also looking at creating a corpus of around 30 lakhs. Okay, he has invested alone right now for 30 lakhs. He wants his expectation 15 years time to build a corpus. He shortlisted few funds: SBI Equity Savings, ICICI Pro 50 Equal Weight, Quant Small Cap, ICICI or HDFC Balance Advantage Fund. So I don't think we have a week on the phone line, but then given the fact that he's got 15 years to build a corpus, uh, what should his strategy be? He wants to invest 30 lakhs right now,
Kavita,
and
see,
these are the funds that he selected for himself. Yeah.
yeah. See, Kavita, he has selected funds, but he has two distinct goals. One is retirement, another one is contingency planning. So, when you say contingency planning, though he mentioned that for 5 to 7 years, but I'll say for contingency, he should have schemes where there is a lot less volatility and liquidity should be good. So, in that case, the fund he has selected, SBI Equity Savings Fund, it can be considered. So, he can park some money in this scheme which will serve the purpose of contingency planning. But for retirement planning, which is a long-term goal, and he says that for 15 years he can invest, for that, out of the funds which he has selected, I'll say that ICICI Prudential Nifty 50 Equal Weight Index Fund can be considered, and also this HDFC Balance Advantage Fund. Quant Small Cap Fund he can skip at this moment, and because Balance Advantage Fund he has selected two, ICICI as well as HDFC Balance Advantage Fund, I'll say that he can go ahead with the HDFC Balance Advantage Fund. And apart from that, I'll recommend a few more schemes for him. One is Kotak Multi Cap Fund, and another will be or HDFC Multi Cap Fund. Anyone he can choose from these two funds, which will give him exposure to mid cap and small cap along with large cap. So one scheme out of these two, and rest from his selection of scheme, I have suggested few to him.
Okay, let's take Mayank's question. Um, Okay, Mayank is specifically interested in having the highest dividend yield mutual fund, and that too for retirement income strategy. We are not aware if Mayank already has an investment portfolio, but dividend yield funds, this seems to be a category that's, gaining momentum among investors, and just because they have this they see this dividend yielding benefit, they think for a retirement strategy this would be the right kind of investment, but is it the right way to go about it? And also, since we don't know Mayank's existing portfolio, or even if he's a new investor, should he be going with these kind of funds first as a beginner?
Kavita, see, he mentioned that highest dividend yielding funds. Now, see, one category is there, which is known as dividend yield fund. But that category does not mean that they will give high dividend. That category means the scheme will invest in such stocks which has potential to deliver higher dividend, but does not mean that the scheme will deliver dividend. So that is one thing investor must understand. So dividend yield fund simply means stock selection is based on this thing, that stock will deliver higher dividend, and means that is a category. Now, second thing, when investors expect the scheme to deliver higher dividend, I'll tell you now, because there is no such thing dividend, it has been replaced with the income distribution come capital withdrawal. It means if a scheme is distributing some money regularly, it may come from the capital also, not necessarily from the profit. So, my suggestion, investors who want to manage their cash flow through the regular income, for them, SWP can be a good choice. If you go by the scheme's past performance, for example, a scheme has delivered regular IC income distribution come capital withdrawal, or you are referring it to dividend, for example. So if a scheme has delivered regular dividend, does not mean that the scheme has performed better than others. It may be from the capital they are distributing money. So in that case, it is better that you select some diversified funds in a portfolio or hybrid funds and opt for SWP. Second thing, from the tax planning perspective also, I'll say, when you receive this dividend, it's fully taxable. But when you opt for IDCW, then the tax will be, for example, if you are selecting equity funds or hybrid funds, aggressive hybrid fund or balanced advantage fund, the tax will be on the lower rates on the as a long-term capital gains or short-term capital gains. So that is a better choice. I think I'm able to explain this thing. Kavita, thank you.
All right, let's quickly move on to our last viewer's question, which is Harsh. And Harsha says that he is 32 years old and aiming to earn 2.5 crores in 35 years. And he just started investing 6 months ago, and he's investing 25,000 per month in Parag Parikh Flexi Cap, UTI Nifty 50 Index, Kotak Emerging Equity, Quant Small Cap, Edelweiss Small Cap, and Nippon Small Cap again. All right, so 35 years he has in his hand and 2.5 crores. Pankaj.
Here you can see he has 3 small cap funds. So first thing, what I'll suggest him, that he should discontinue one scheme out of this small cap. So Edelweiss small cap fund, he can stop his SIP in this. And second thing, as far as target is concerned, he is expecting 2.50 crore. But if you consider 6% inflation, if you assume it, the value of 2.50 crore at this moment will be something like 58 lakh rupees of today. Means in future, after 25 years, the 2.50 crore will be something which is 50 lakh today. So that is why the target should be bigger than this. But yes, if he's investing 25,000 rupees per month with 12% CAGR, he can expect something like 4 crore 25 lakhs. So he should continue the 25,000 rupees, and also, if possible, he should step up his investment year after year. And as I suggested him to stop one SIP, I'll suggest him to increase the amount in Kotak Emerging Fund. He has one mid-cap fund, Kotak Emerging Equity Fund. So he can increase that SIP amount in this. And even if you want to increase the SIP amount further, he can consider adding to this fund.
No? So cancel SIP in Edelweiss Small Cap and divert amount to Kotak Emerging Equity and step up your SIP regularly is what Pankaj is suggesting. Thank you so much, Pankaj, for being on the show and helping our viewers with their mutual fund portfolio queries today. On that note, it's a wrap up on the Money Show as well today, but then I'm going to leave you with our WhatsApp number and email ID where you can send across your questions. Your questions can be about mutual funds, insurance, any tax related investment or anywhere else that you would want our help to accomplish your financial goal. Send across your question on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.